Welcome back to our YouTube channel where your request shapes our content. We value your inputs, and that's why we have decided to base our video topics on the request we received from you, our fantastic viewers. Here's how it works. If you have a specific topic in mind that you would like us to explore, all you have to do is leave a comment on any of our videos. We carefully note down all the topic requests we receive, creating an extensive list of suggestions provided by you. From this ever-growing list, we carefully select our topic for the next video, ensuring that we cover the subjects that interest you the most. So whether you're a beginner trader looking for guidance or an expert trader or investor seeking advanced techniques, your requests play a vital role in shaping our content. We believe that by incorporating your suggestions, we can create video that truly caters to your needs and provide the information you're seeking. So don't hesitate to let us know what topics you would like us to tackle next. Your input is incredibly valuable to us. In today's video, we will be diving deep into an essential aspect of stock trading: delivery volumes and percentage. Understanding delivery volumes and percentage can provide valuable insight into the market sentiment and help you make informed trading decisions. So let's get started and learn how to use trading volumes and percentage in stocks. Myself, Srujit Kakar. Before we move ahead, let's get done with some basic formalities. Please ensure you go through the disclosure, which talks about representation, risk disclosure, risk involved in the market, and the copyrights. How to use delivery volumes and percentage in stock trading. In stock trading, delivery volume refers to the number of shares or units of a particular stock that are traded and physically delivered to buyers during a specific period, typically on a trading day. It represents the actual transfer of ownership from the seller to the buyer. Delivery percentage refers to the proportion or percentage of shares that are actually delivered or settled on the agreed upon settlement date in a financial market. The delivery percentage is calculated by dividing the number of shares actually delivered by the total number of shares traded during a specific period, typically a trading day. It represents the percentage of trades that result in physical delivery of the underlying security. How do I check the delivery volume and percentage? You can check it on the NSE website. The link is available in the description. Let's look at few examples. After opening this website on your web browser, what you need to do is, under type, you have to select security wise price, volume and deliverable positions. In the symbol column, you will type the symbol for which you need the information. So let's assume I want information for ICICI Bank, so I'll type it. Now the reason it is not showing me any records as of now is because yesterday the markets were off. So that is the reason from 29th to 30th there will be no records for it. But let's assume I want to see data for the last 1 week. So I can click on 1 week, and here you can see now have the information about the last 1 week. What was the total traded quantity, and what was the deliverable quantity, and what was the percentage of that deliverable quantity. Similarly, if I want to see the data for the last 1 month, I can click on 1 month. I want the data for 3 months, I can click on 3 months, and that is how you get this information. What you can also do is, if you want to download this information, you can click on download.csv and you'll have this information downloaded for you. Let me do this. Let me download the data for the last 3 months. So I'll click on 3 months, I'll click on download, and once the file has been downloaded, I can simply click on it and it will open in the Excel sheet. Now what I'll do is I'll adjust the columns so that I have all the information. So now the question is how to read this information and what to interpret from this information. What is the significance of delivery volume? Higher delivery volume indicates a higher level of genuine interest in a stock. When delivery volumes are high, it suggests that the investor are willing to hold on to the stock for long term rather than engaging in short-term speculation. Delivery volumes are an indicator of market liquidity. If a stock has consistently high delivery volumes, it implies that there is an active market for that stock, making it easier for traders and investors to buy and sell shares without significant price disruption. Delivery volume play a role in determining the price of a stock. When the delivery volumes are high, it implies that a large number of shares are being bought and sold which can impact the stock price. Higher delivery volumes are often associated with increased price volatility. Traders and analysts often use delivery volumes as part of technical analysis to study price movement and identify trends in the market. Unusual spikes or drops in delivery volumes can provide insight into potential change in investor sentiment or the strength of a particular trend. Monitoring delivery volume can help detect market manipulation practices such as pump and dump schemes, where a group artificially inflates the price of a stock and then sells it off quickly. Unusual high delivery volumes combined with sudden price movement may indicate such activities. Overall, delivery volumes provide valuable information about the level of investors' interest, market liquidity, price discovery, and potential market manipulation, making them an important aspect of stock trading analysis. How to interpret delivery percentage for bullish signals. A high delivery percentage, which represents a significant proportion of shares being delivered compared to the total outstanding shares or trading volume, can be seen as a bullish signal. It suggests strong investor conviction and willingness to hold the stock for long term. If the delivery percentage is consistently rising over time, it indicates an increasing trend of investors taking delivery of shares. This suggests growing confidence in the stock's potential and a bullish sentiment in the market. When the delivery percentage is higher than the trading volume percentage, it implies that a substantial portion of trading activity is resulting in actual share ownership. This can be interpreted as a bullish signal, indicating that investors are more interested in holding a stock rather than engaging in speculative short-term trades. How to interpret delivery percentage bearish signals. A low delivery percentage, where only a small proportion of shares are being delivered in relation to the total outstanding shares or trading volume, can be seen as a bearish signal. It suggests a lack of long-term investor commitment and potential price volatility driven by short-term speculation. If the delivery percentage is consistently declining over time, it indicates a decreasing trend of investor taking delivery of shares. This suggests diminishing confidence in the stock's prospect and a bearish sentiment in the market. When the trading volume percentage is higher than the delivery percentage, it implies that a significant proportion of trading activity is driven by short-term speculators rather than long-term investors. This can be interpreted as a bearish signal, indicating a lack of conviction and potentially increased price volatility. It is crucial to consider other factors such as fundamental analysis, technical analysis, and market conditions in conjunction with delivery volume and delivery percentage to make well-informed investment decisions. The interpretation of these signals should be done in the broader context of the stock's overall trend and market dynamics. So let us see what is the easiest way to understand the delivery volume or percentage based on the CSV file that we downloaded from the NSE website. To understand delivery volume or delivery percentage easily, we can use visual charts. Now in this example, you saw that I downloaded the data for the last 3 months. Now if I want to see what has been happening with the deliverable quantity, I can click on this column, and from insert, I can simply go for a line chart. And here you can see that with time, the delivery volume as of now has been increasing. And this is how you can have a visual representation of it. Now, just as an example, visually we can see that this has been the average deliverable quantity, right? And in which dates it has been less than the average, and on which dates it has been more than the average. We can do exactly the same thing with the percentage. We can select the percentage column, and then I can click on insert and again click on the line chart. And now here you can see that with time, the average deliverable percentage has been increasing. So let's say if you are planning a trade, let's say using support and resistance level, and you see that your price is in the support area, and that also shows you that inside of that support area, now the deliverable quantity is increasing, or the deliverable percentage is increasing, that can be a signal for you that yes, if I want to buy in this support area, this could be the right time for me. So do ensure that you do not use this information as standalone. This information should be used in conjunction with whatever your trade plan is. It is important to note that while delivery volume and percentage can provide trading insight, they should be used in conjunction with other technical analysis tools and indicators. Price pattern, trend lines, moving average, and other indicators can help strengthen your analysis and increase the accuracy of your trading. Remember to consider the context of the market and use a comprehensive approach to confirm your trades. Market conditions, news events, and other factors should be taken into account to make informed trading decisions. Congratulations, you have now gained a solid understanding of how to combine delivery volumes and percentage in stocks into your trade plan. Remember, delivery volumes and percentage can provide valuable insight into market trends and investor sentiment, giving you an edge as a trader. Make sure to practice analyzing delivery volume and percentage, refine your strategies, and stay updated with the market news. With dedication and discipline, you will be on your way of becoming a successful trader. If you enjoyed the video, don't forget to like, subscribe, and hit the notification bell to stay notified about our upcoming content. Happy trading!